Welcome to Reverse Mortgage Radio, hosted by KLZ's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage. Everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages. One of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hello, and thank you for joining me today on another episode of Reverse Mortgage Radio. Today, we're going to be talking about the question, should I stay or should I go? Basically, it's downsizing and selling your home and downsizing versus a reverse mortgage. Which one is right for you and your retirement plan? So we're going to dig into the pros and cons of selling, the pros and cons of staying, things of that nature, and how reverse mortgages might help you out to do one or the other. So let's jump into it. Before we get going, though, I do want to let you know, if you have any questions about reverse mortgages at all, please call me. My name is Bruce Simmons. I'm the reverse mortgage manager for American Liberty Mortgage here in Denver. You can reach me directly at 303-467-7821. That's my direct line. Right now I've got it forwarded to my cell phone. So it rings to a landline and then is forwarded to my cell phone. Don't try to text me at that number. It won't go through because it is a landline. 467-7821. You can also visit me online at reversemortgageradio.net. Reversemortgageradio.net is my website. I've got a lot of great information on there. I've got video testimonials, written testimonials, a lot of basic information about reverse mortgages. My radio shows are also all on there, dating back to, I think, 2017 when I first started. I think all of them are on my radio or on my website. And so if you have to leave in 10 minutes and you want to hear the show, you can go to my website at reversemortgageradio.net and you can listen to the entire podcast there on the show. It's also available for download on some podcasting things. I'm having trouble with my Apple login. I don't normally use Apple, and I don't know. Anyways, I doubt I'll ever be on iTunes just because of that. But you can listen to the entire show there. You can read my blog post, all that stuff. You can also download my free consumer guide. I've got like a 40-page consumer guide that's online. All you have to do is put in your email, not even your phone number or anything. Just name and email is all I need, I think, in order to get that. You could also get a free quote. And actually, it's one where you put in your basic information, no social or anything like that, and it will give you your numbers right away on what we can do for you. So you don't have to put in your information, worrying about somebody selling your name 14 times and getting calls from all over the country, people soliciting you for reverse mortgages. I'm the only one that gets that information. So go in there, figure out whether or not a reverse mortgage might make sense for you. Call me with any questions at 303-467-7821. All right, let's jump into this, because first thing I like to talk about is kind of the benefits. Let's talk about the benefits of downsizing, okay? If you're in a house and you're debating, okay, should I stay or should I go? Let's talk about the pros and cons. First of all, obviously, if you sell and move, it's a whole lot less maintenance, right? And the cost, so you don't have the cost of the maintenance of a bigger home. You have a 2,500 square foot home with 3 or 4 bedrooms. Think of it, you're probably heating and cooling about half that house that you're not even using. In addition, if you have a yard, you're watering the yard that maybe you're not enjoying as much. Maybe you do enjoy. Maybe you love to garden and things. And that's a consideration, because then that would be a negative of downsizing to a small little tiny lot, or even a condo or townhome where you just have hardly anything going on in the yard. But there are community gardens too, so you got to keep all those different things in mind. But overall, the cost is going to be less ongoing. Keep that in mind. It's easier accessibility, so you might be able to find a place with no stairs. That might be huge, especially if you're in a multi-level home, a bi-level or a 2-story home, or you have a lot of stuff in the basement and you're going up and down in the basement. Maybe your laundry is in the basement. You got to carry your laundry downstairs. Well, that could be treacherous as you get older, especially as the knees or hips start hurting. That could be very bad. You can move to a better area. It's possible you live in a home that you bought 40 years ago and it was a beautiful area, but since then it's kind of gone downhill. And there are areas like that around Denver or Colorado Springs or even Fort Collins and Greeley, definitely. Because this radio show goes to all along the Front Range. So I don't know where you might be listening to me from. The other thing, too, is you can reduce the expenses as far as upkeep, like no yard and lower water bill, definitely. You also, if you sell your home and you buy a cheaper place, if you own it free and clear especially, you might be able to get more money. So let's say you sell an $800,000 home and you buy a $500,000 condo. Well, now you have $300,000 left in your home, not counting expenses, of course, which could be substantial on an $800,000 home. But that's something to consider. That certainly is a benefit. That's a huge benefit. You got that extra cash that now could help you to live more comfortably. So that's a huge consideration. But also you're saving your time and energy, not having to clean a house or fix things or take care of the yard, all that stuff. You know, if your furnace goes out, now you've got to find the time to get somebody new in there and the cost, obviously, of repairing it. So that's something. Flexibility. This is something a lot of people don't think about. If you're in a smaller home, or especially a condo, if you purchased a condo, it's a whole lot easier to pack that condo up and leave for a month, okay? And not have to worry so much about the house being left vacant and open to criminals. Because if the condo is in a hallway, especially, it's kind of like an apartment. You know, there's people coming and going all the time in that hallway, and you could tell your neighbor, hey, you're leaving or what have you, and it's easy for them to keep an eye on it. Whereas in a neighborhood, it's not always quite the same. And people could notice that you're not there in a regular single-family home easier than they could in a condo or a townhome. All right, but remember now, we're talking about that was all some positives. But there's two sides to every coin, right? Let's talk about the negatives. Obviously, emotional distress. That could be a huge thing. You're leaving a home with a ton of memories, especially if you've been there 30 or 40 years. You've raised your kids there. Maybe you lost a spouse, and the spouse, you were living in the home when the spouse passed away. So you've got all your memories of your spouse in that home. Also, losing social connections. I know my mother-in-law left a small community in the mountains and moved to Colorado Springs. And when she did so, she was very involved in the community, in the church. She did a lot of volunteer work in the community. She had so many friends there. And it was very, very difficult for her to leave and go to someplace where she didn't really know very many people at all. I think she knew there was one person in that community that was from the area where she left, and her daughter lived in Colorado Springs about 20 minutes away. But still, it wasn't the same, obviously. So you lose those social connections. Granted, the ongoing cost could be less, but it's expensive to sell your home. And then tack on to that, moving a van and moving all your stuff, and then the cost associated with buying the new home. All of that could be a huge amount. I know back in the day, now I don't know what it is exactly now because some rules have changed with the commissions of realtors, but we used to calculate when you sell a home, roughly between the costs and the realtor commissions, you're going to look at paying like 7% on a home. So you figure that $500,000 home, that's $35,000 on a $500,000 home. Just in the selling of it. That's not counting for the move at all. The hiring of the truck and the cost of all that stuff. That could be very expensive. You also, the ongoing costs could be less, but they might even be a little higher and a little more unpredictable because of new fees. You're going to lose your senior tax exemption. Now, I don't think that changed with the new law. I should have checked that first. Hopefully it'd be great if it didn't. But I think that if you move to a new home, you're 60, maybe you're 75 years old and you've been getting this senior tax exemption since you were 65, so your taxes are lower. Now, granted, the property value is lower, so it's possible your taxes could still be lower. But then most senior communities have HOA fees. And if you move to a condo, those HOA fees could be a lot. And if they end up having to replace a roof and they didn't have a proper reserve account, that could be a huge special assessment where they tack on an extra $300 or $400 or $500 a month for a year or 18 months or even 2 years to your HOA dues to help bring that reserve back up or to pay for the actual repair itself. So you've got to be aware of things like that when you get into a community with an HOA. And it's very difficult to get into a smaller home where the yard and everything is maintained without an HOA, because people don't work for free. And if you want to have your street shoveled or your drive shoveled and of snow and your yard cut, if you have a front yard at all, things like that, or a pool, those all cost money. And that's what the HOA goes to. The other thing too, there's going to be a lot less space. So the stress of getting rid of a lot of things that you've accumulated over the years, the emotional distress, not just of the leaving the home, but also of having to get rid of a lot of your possessions that might be very special to you. Some furniture is very easy to get rid of. You just toss it. Or have somebody from Habitat for Humanity come pick it up or something like that. But a lot of it is sentimental, and that could be very stressful. The time factor too, just going through everything, because especially if your kids were raised there and you still have the little paper plates with the golden macaroni glued to it, that may have some tie to you. It doesn't for me, for my kids, for when they did that, or I didn't care if my mom threw my stuff away when I was young, but I'm not a real emotional person, as some people are, and that could be very, very difficult for people. Another thing to keep in mind too, if you've been living in a single family home forever, maybe you like to turn up your music when you vacuum. They say, I've heard it said that you're getting old when when the music you used to party to, you now clean the house to. And I found myself doing that. I'll put on good old 80s rock and roll and crank it up when I'm cleaning the house, especially if my wife's not here. She's here. She doesn't like it that loud, but I do. And if you like doing stuff like that, and now you're in a place where you've got neighbors on both sides, two shared walls, or even one, you got to be careful because it could disrupt your neighbors and there's less privacy. And the overall stress of moving too, that's certainly a negative for a lot of people, just a combination of everything. And if you've collected a lot of stuff, it could just seem overwhelming to have to try to deal with packing it up and moving it. So those are the negatives. We talked about the benefits and the negatives of selling your home, downsizing and selling. But if you have any questions about reverse mortgages, because we're going to get to reverse mortgages, you are listening to Reverse Mortgage Radio. I'm your host, Bruce Simmons. My direct line is 303-467-7821. 303-467-7821. I'm the reverse mortgage manager for American Liberty Mortgage. And American Liberty Mortgage is a A+ rated Better Business Bureau company here in Denver. We're a local mortgage banker. I think we do business in like 11 states right now, and we're still growing. We're still adding different states here and there, but we're mainly in Colorado. That's our hub. We've got an office in Colorado Springs and one up in Loveland, and so you can definitely call me. I go all along the Front Range and wherever, Lyman or up to the Evergreen or wherever. I don't really go into the mountains as much anymore. I used to. I've done loans in Morrison and Grand Junction, and I've driven there for that. But now with e-sign, it's not quite as cumbersome to have to go there or to have to overnight documents to you. We can still do that. I could still overnight documents to you if you live up in Morrison or in Grand Junction or Vale or someplace like that, if that's what you want. But most people are comfortable nowadays doing e-sign for the application at least. But you can reach me also at my website at reversemortgageradio.net. Go there and download my free consumer guide. Get a free quote on how a reverse mortgage might benefit you as well too. Okay, let's talk about the possibility of saying, instead of moving, you decide you want to stay, but you need extra cash. So now you need a reverse mortgage. Well, a reverse mortgage is an FHA insured loan most of the time anyway. We do have proprietary loans for certain circumstances, but it's an FHA loan that's specifically designed for people who are 62 and over. It allows you to convert a portion of the value of your home, okay, not the equity. We take the value and we apply a formula to it that's based on the age of the youngest homeowner, the value of the home, and the interest rate. It doesn't matter how much equity you have. You might call me and say, hey, I've got $500,000 in equity. Can I get a reverse mortgage? And I'll say my favorite answer, it depends. And then I have to gather some more information. Because if you tell me you have $1 million home, you're 62 years old, and you owe $500,000 on it, I'm not going to be able to help you with a reverse mortgage because I cannot loan you enough to pay off that $500,000 loan. I have to be able to get you enough money to pay off any existing mortgage you have on the home. So if I can only loan you 35% of the value and you owe 50%, you would either not be able to qualify for a reverse mortgage, or you could still do a reverse mortgage, but you'd have to bring the money that I can't loan to the closing to pay off the existing mortgage. So if you have a $500,000 home and I can only loan you $350,000, that's $150,000 we're short to close, and that's what we call it, short to close. So you would have to bring $150,000. We take that your $150,000, add it to the $350,000 we can loan. We send that to the current mortgage company to pay them off. So that loan gets paid off completely, and you have no mortgage payment. The house is still yours. It's still your house. You could paint it purple or add a bedroom, whatever you want, but you do have to continue to pay the property taxes and the homeowner's insurance. You have to maintain it, live there as your primary residence, and keep your name on title. As long as you do those 5 things, no payment is ever required on the mortgage, on the reverse mortgage. However, you are still charged interest every month. You're not paying it, but you're charged it. That interest gets added to the loan balance. So you start off with a $350,000 loan balance. Whatever the interest is for that month gets added to the loan balance, and now you've got $350,000 balance plus that month's worth of interest. And next month, you're going to be charged interest on the $350,000 plus the interest. So whatever interest you're charged from one month to the next, to the next, to the next, gets a little bit bigger every month, assuming the interest rate stays the same. It's called compounding. So you have to be aware of that. And that's one thing, that's why I like meeting people in person. Whenever I can, I like to come out, I'll work up numbers for you. You call me and say, hey, I want to look at this, and I'll work up numbers, and I'll come out and I'll go over all the numbers with you. And I make sure that you understand how it works. Because in 22 years of doing business, I've never had a customer call me and tell me they've regretted doing the reverse mortgage, or a family member for that matter. In fact, this week I met with, a lot of times I meet with family members as well. So you could have son or daughter or attorney, financial advisor, brother, sister, whoever you want, be there when we're meeting to make sure I get everybody's questions answered. Because a lot of times you might understand it, and then you talk to your brother who maybe is more financially savvy than you, and he says, well, what about this? You're like, darn, I knew didn't think of that. Or you say, he mentioned something about that, but I don't remember what he said. So that's where having extra eyes and ears at the meeting help. To put everybody at ease when you're learning about something as unique as a reverse mortgage. It's a great program, but you need to understand what you're getting when you get into it. Because if you don't, you might regret it 3 or 4 or 5 years later. And then suddenly it's the reverse mortgage that's bad. Oh, this sorry, scummy salesman sold me some lousy reverse mortgage. It's not a lousy program. It's a great program. I think it's perfect. I love it. I'm going to do it myself when I'm old enough. But if you don't understand it, it may not be right for you. Okay, it's not obviously not right for everybody. But in order to know whether or not it's right for you, you need to understand it. And that's where having you and whoever else is involved in your life there to help listen and see and understand how it all works. Okay, I'll get off my soapbox now. Okay, so that's in a nutshell how reverse mortgages work. The nice thing is, let's say we can loan you $350,000, but maybe you only owe $100,000. So we take $100,000, pay off the mortgage that you have. Now you have no mortgage payment, and you've got another $150,000 or $250,000 set aside in a line of credit. Now that $350,000 amount is based on like $1 million home. Most people don't have $1 million homes. Some do, but the average value of a home, I think, that last year that I was working on was around $500,000. I'm not sure. I don't remember right off the top of my head. So think of it. Okay, instead of 350, maybe you got to get 175,000. You get 175,000. You owe 100 on your mortgage. So we pay off the 100, and that leaves $75,000 left over that you can either set up as a monthly payment where we deposit money every month in your bank account. You can also take some of it as a lump sum. You don't have access to all of it in one lump sum at closing. There's restrictions on the amount that you could take at closing, but it's all available to you after 12 months. So what you can do is take what you can at the beginning if you need it, only if you need it. I always say don't take more money than you need because you're charged interest on it. Leave it sitting in a line of credit. That's the third option. That line of credit grows over time, which is one of the beauties of this program. The line of credit will grow over time. And then it's not interest. You're not earning interest. It just increases the amount of money you could borrow in the future. So it's available to you whenever you need it. And I always say, save it for emergencies then in that situation. Or if you have a financial advisor, work with your financial advisor about drawing it out strategically in combination with other assets that you have. So you can use the reverse mortgage for a lot of different things. You can create additional revenue stream for you so you could live more comfortably. You could take out some money to eliminate your mortgage payment and reduce your debts. Maybe you could pay off some credit cards too, or maybe you need to upgrade your home. Maybe you need a new furnace, or maybe you need some other repairs on your home, or you want to create it so you can live there, get a walk-in tub so that you could live there as long as possible. All these things are possible. So you can do a reverse mortgage on your current home. You could sell your current home and buy a new one, or you could do both. You can get a reverse mortgage on a new home that you're buying. So you sell your current home, let's just do a quick scenario. I did a loan for a guy. I think this was one of my very first, what we call reverse for purchase. The guy, his wife had passed away about a year earlier. He had a huge home in Lakewood on like 3/4 of an acre. The house was on. He had trees all around, and he had a lot of maintenance on the house, and the house needed to be updated too. Well, he ended up selling the house. This was like back in 2009 or 10 for, I think, $450,000. And he was able to, he owed some money on the house, so he had to pay off what the mortgage it was owed. And I don't remember the numbers exactly. But he was able to buy a new patio home for $215,000. So that it was a nice place that he moved into in Thornton, from Lakewood to Thornton. And he was closer to his kids. He was able to get into that home, and we gave him a loan of roughly 50%. Maybe, I think at the time it was more, but we don't loan that much anymore. He was on the older side. He was in his late 70s, I think, or early 80s. But he was able to get into that home and keep money in his pocket and eliminate a mortgage payment. So he had the best of all worlds. He got rid of a mortgage payment, reducing his debt by selling the home. He didn't have to buy the whole home in cash, so he was able to keep money in his pocket from the sale of his other home, and he had no mortgage on his current home. It was a win-win-win situation for him because he used a reverse for purchase. And there's a lot of people that don't understand reverse for purchase. What we're going to do is I'll make a commitment. Next week, we're going to get into the weeds on reverse for purchase because I just think it's a fabulous program. It's how I'm going to benefit from a reverse mortgage when I am old enough to do it, and once I decide to move, probably in the next 5 or 6 years, because I'm only 59 and a half now. So I've still got a few years to go before I turn 62, but I probably will stay in my home until I'm in my early to mid 60s, closer to retirement. And then I'm going to buy a new house somewhere, I don't know, in Colorado, somewhere around here that's probably all on one level, because right now I've got a multi-level home and a good-sized lot. Now, I like to garden too, but in 5 years, if my health isn't good for some reason, hopefully it will be, but that's one of the best programs that's available. So you get the best of both worlds. You can downsize, you can keep more cash in your pocket, and not have a mortgage payment on your home. Now, obviously, if you don't want to downsize, then you don't do it because it's you just get a reverse mortgage on your current place, and you can still benefit from a reverse mortgage that way. I think the reverse mortgage for purchase is a very, very underutilized program. And I think because people just don't understand it. I think it's been well over a year since I've dived into it and on all the details. So tune in next week on Reverse Mortgage Radio if you want to hear about the reverse for purchase program. So today what we talked about are the benefits and the negatives of downsizing. We talked about the possibilities of staying in your current home if that's what you want to do and getting a reverse mortgage on it. And then you can also do the best of both worlds if you needed to where you get a reverse mortgage on your new home at the same time. So what you do is you sell your home. For example, you sell your home. Let's say you cash out $400,000 and you want to buy a $600,000 home. So maybe you put down, we could loan you $200,000 on the $600,000 home, and you put down the $400,000 and you get a much nicer home than you could have. Or you buy a cheaper home and you keep money in your pocket. Either way, make sure you tune in next week and we'll dive into the details. I'll have specific examples for you. Give me a call with any questions. My name is Bruce Simmons. My number is 303-467-7821. I'm the Reverse Mortgage Manager with American Liberty Mortgage, and you can also visit me online at reversemortgageradio.net. Go there and download my free consumer guide with like 40 pages of great information that'll answer probably 90% of your questions, or put in your information to get a free quote. Right then and there, you get the numbers, and or just give me a call. I'd love to talk with you. Thanks so much for joining me today. I hope you have a super fantastic.
Call KLZ's reverse mortgage professor, Bruce Simmons, today. Ask about his free Colorado Consumer Guide, 303-467-7821, or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA. NMLS number 409914. American Liberty Mortgage is an equal housing lender.